This currency focus is proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business. Andre Cilliers from TreasuryONE joins us for our weekly chat about the currency markets. Andre, and it was interesting going back after the second quarter's results, in other words, the 3 months to the end of June, to see that emerging market currencies, the rand amongst them, had their best 3 months against the US dollar in 7 years. I guess that puts it all in perspective for us.
Yes, indeed. And if we look at the rand and the levels that we've reached in that quarter, we've been as low as 13.40, then that tells us the story, how well the emerging market space has done in that period. Towards the end of the quarter, it ran out of steam a little bit, but we can discuss those factors. But we've certainly had a fantastic quarter. We've had a fantastic year so far, both the first and the second quarter, and that was for us mostly linked to commodity prices that had done extremely well in that period. But we must also not forget that that was also the period where COVID-19 took a little bit of a backstep in the start periods of that quarter, first and second quarter, and economies started getting back onto steam and growth started showing.
Yet, in the most recent couple of weeks, it's gone the other way for emerging markets, particularly in South Africa, where the third wave has now brought another lockdown, which I guess has implications.
It certainly does have implications. We know that the restaurant industry is basically closed again. To say that they can survive on takeaways is simply just not going to happen. So there's a lot of jobs being lost there. Impact definitely on the economy. Tourism sector is in the doldrums. We know that in Gauteng people cannot leave the province for leisure purposes. And we must not forget that that's the hub of the country. So I would reckon somewhere between 50, I hear that the figures that people say is 60% of all tourism emanates from Gauteng into other provinces. So that certainly will have a dramatic impact, especially since we've not really seen international travelers pouring back into the country. We've also seen that the airlines has actually suspended their flights in most cases, not only for the first week or so of the lockdown, but for the whole of July. That spells very, very negative things for our economy and the impact on our economy going forward.
It's so interesting, Andre. You're in Cape Town?
I'm in Cape Town, yes.
Up here in the north, I remember that the jokes that used to go around where the Cape Townians would say, look, guys, you Valis can stay up north. Just send us the money. Post it to us this time. Don't come and mess up our beaches. It's a similar thing with in KwaZulu-Natal. They don't really want the tourists there, but they need the tourism money. And the point you made a moment ago, 60% of all tourism internally comes from Gauteng. And of course, with the lockdowns, meaning that there's nothing going out. Those checks aren't being sent either. It's quite significant when you consider the impact that tourism has on the economy generally, and particularly for the coastal regions.
Absolutely. It's if you just think in terms of wine farms, they can even come back this week and say that they're opening up restaurants again. But if tourism doesn't come back to the Western Cape, your wine farms is in serious trouble. They rely on those people. It's people that is heavily invested into the restaurant industry. We know about all the fancy restaurants on all the wine farms. And if those things are standing empty, those people are certainly in trouble, and our hotels are not filling up. It's just a absolutely add-on situation all the time, and it's a lot of jobs that's on the line in a country where we desperately need the creation of jobs. And that, unfortunately, if we don't see the jobs being created, that increases our poverty. It's the poorest of people that get negatively influenced by that. And unfortunately, that will eventually also have an effect on our politics, because those people will walk to the polling booth, especially this year when we have municipal elections, and they will vote accordingly, because they are really battling.
What does all of this mean for the currency? Now we sketched that the emerging market currencies, including the rand, have had a good year and a fantastic second quarter in particular. Does that ring some kind of a bell to say, watch out, it could be very different in the second half of the year?
I think the second half can be very, very different. Now, we must keep in mind that a weak economy in South Africa generally bodes well for the exchange rate. And that's simply because the weaker the economy, the less you import, because there's just no use and demand for products. So generally, under normal circumstances, a weak economy will bode well for the exchange rate, because your exports continues to be on the high side, imports low. And that was certainly also part of, and we've seen that hitting our trade figures in the first and second quarters. The third quarter, to me, spells a little bit something different. Even with demand being low, we might not see a positive effect on the exchange rate. And that would be linked to a third wave. It would be linked to very slow vaccinations, and a walk of financial transactions. Foreign investors will take their money and they will run. Because that will tell them that this economy, at the slow pace of vaccinations, it's estimated at the rate that we're vaccinating people, that we will only get to about 50% of the population by the end of 2023. Now, that's a long time off. And if that's the case, the continuous negative effect on the economy will make investors take their money and run, go to countries where vaccination rates, and there's many of them, not only first world countries, there's emerging markets that is way ahead of ourselves in terms of their vaccination rate. So I'm afraid that even with low demand, the impact of the third wave and the slow vaccination process might turn things around in the third quarter, and we could see some nasty negative influences on the exchange rate.
Some very relevant stuff that you've highlighted there. We had this morning news from our partners at the Wall Street Journal that the UK is proving, because so many people there have been vaccinated, that a vaccine is a 95% shield against mortality from COVID-19. That's an extraordinary number, and hence the UK can open up their economy again on the 19th of July, as they are projecting. For this economy, without the vaccinations, I guess wave after wave is possible.
Wave after wave is possible, and chances are, if we look at the infections coming through, the rate of infections coming through, the amount of infections coming through, chances are that comes the end of this week, when Mr. Ramaphosa will most probably address the nation again, because he introduced the lockdown level 4 levels for a period of 2 weeks to be addressed again. Chances are that it will be extended, and that will be perceived extremely negative, and we could see quite an impact then on the rand. Up to this point in time, it was mainly driven by the US dollar, mainly driven by inflation figures, and a little bit less focus on the COVID-19 level 4 restrictions. But if he extends this by the end of this week, I'm afraid to say that we could see quite a nasty effect on the exchange rate.
So watch the vaccinations and urge the authorities to start rolling those out as aggressively as possible.
I cannot understand why they do not get greater and bigger involvement from the private sector in terms of vaccinations. Why the heck they want to be the only ones rolling this out, and, sending out the doses to the private places, get everybody on board. Just do it as widely as possible and as quick as possible. Ultimately, and you've mentioned that's the savior. That's how you will be able to open up your economy and return to some level of normality.
This Currency Focus was proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business.